If you own a business and your CPA keeps saying you've run out of tax shelters, they're missing this one. Because the truth is, there's a century-old IRS-approved strategy that legally shelters your money from future taxes. And most accountants never mention it. It's not a loophole, not a gray area. It's written right into the tax code, section 7702 of the IRS Code. And while most entrepreneurs are busy feeding their 401ks or SEP IRAs, deferring taxes they'll pay later at higher rates, the wealthiest business owners are quietly avoiding them altogether. Let's talk about the one shelter no one probably told you about, but every financially elite family uses. Hello, my name is Robert Balgac. I'm the founder and CEO of Black Swan Insurance Group. Since 2017, we've helped over 20,000 families use this strategy to create tax-free retirement income, and we have earned hundreds of 5-star Google reviews. So this isn't just theory, it's math, structure, and tax law. And if you're curious what tax-free retirement could look like for your business, click the link below to book your tax-free wealth strategy session with us. Because when you understand how this works, you'll never see your taxes or your retirement plan the same way again. Meet Jessica, a 44-year-old salon owner from Texas. She works 60-hour weeks, brings in $400,000 a year, and every April sends more than $120,000 of it straight to the IRS. Her CPA maxed out her SEP IRA, bought new equipment, wrote off the office, but every year it was the same story. Sorry, Jessica, you're out of tax shelters. What her CPA didn't tell her is that Jessica didn't need another deduction. She needed a tax classification shift. See, traditional plans like 401ks and SEPs don't eliminate taxes. They just delay them. They are tax later tools. And when you're successful, later means high. So what Jessica discovered was that there's a class of financial contracts defined in section 7702 that grow without taxes, access fund without taxes, and transfer wealth without taxes. And when structured properly, it's not a retirement account. It's a private tax-free pension that she can control. So let's break down how this works. Under IRS Code 7702, certain life insurance contracts qualify for 3 things. Number 1, tax-deferred accumulation. Number 2, tax-free withdrawals via policy loan. And number 3, tax-free transfer of death benefit to your family. That is called Index Universal Life, or IUL. But here's the key. The goal isn't the insurance, it's the tax strip. When properly designed, minimum amount of premium pays for the death benefit. The rest grows linked to a market index like the S&P 500 with a 0% floor, so you never lose money to market crashes. Think of it like a vault. Your money sits protected from the market, growing tax-deferred, and later you access it tax-free using IRS-approved policy law. Now let's compare what your CPA usually tells you to do. 401k, SEP, or defined benefit plan. You get a tax deduction now, but you're deferring tax into the unknown future. You're building your biggest asset inside the IRS's future tax bracket. So with an IUL structured under section 7702, you flip that equation. You pay tax on the seed, after-tax dollars, but harvest tax-free. You grow wealth without triggering taxable events. And you can access it at any age with no 59.5 restrictions and no required withdrawals. So here's a simple example. Let's say you're 40 years old and you contribute $3,000 a month for 20 years. That's $720,000 total contributions. And inside a properly structured IUL, that could grow to around $1.5 to $2 million by your retirement age. And now you start taking tax-free policy loans, around $100,000 per year, every year for life, without ever touching the principal. No age limits, no required distributions. And when you pass, your remaining balance blossoms into tax-free benefit for your family. Here's the part most business owners miss: the ability to leverage your business cash flow to create personal, tax-free income streams. Instead of letting profits sit in a taxable account or reinvesting in depreciating equipment, Jessica decided to redirect a portion of her business profits into her IUL each month. And those dollars, which were previously taxed at the highest rate, now grow in a structure where future access is completely tax-free. And over time, the policy becomes more than a retirement tool. It becomes a liquidity source she can borrow from to expand her salon, invest in real estate, or weather slow seasons without bank loans or penalties. It's the perfect blend of protection, flexibility, and tax strategy, a business-funded wealth engine that compounds quietly in the background. That's why smart entrepreneurs like Jessica use this not just as a retirement plan, but as their business private reserve. So here's the truth. If your CPA says you've run out of tax shelters, they're playing checkers while the IRS is playing chess, because the wealthiest people in America aren't avoiding taxes with loopholes. They're using laws written for them. Section 7702 has existed for decades, quietly empowering the financially informed to grow and access wealth tax-free. And the best part? You don't need to be a billionaire to use it. You just need the right structure. So if you're a business owner sick and tired of writing 5 to 6-figure checks to the IRS every year, it's time to see what this could look like for you. So click the link below to schedule your tax-free wealth strategy session. Let's design your own private tax-free pension plan. Because the business builds income, but an IUL builds freedom. And remember, at the end of the day, it's not what you make, it's what you keep. Enjoy the ride.